Hi guys, today we'll be again talking about risk management, and we'll be trying to have the second part of this discussion which we had before. So like I said earlier, I'm not planning to again speak about theory, explain how it's important to follow risk management, just to set trading rules and follow it properly for 100%, because when it comes to practice we understand, right, it's not so easy because market is moving, market is changing, and all the time, right, somehow the emotions can simply, right, avoid it just to follow certain trading rules. That's why what actually would like to emphasize in terms of risk management, the importance of understanding the market. It's kind of knowing your job. If you want to develop yourself, improve yourself in the future, if you want to get in your company her position, definitely you need to know, right, your job much more better than others, and to be 2 or 3 steps ahead. So that's why if the most important thing in trading is that if you want to minimize the risk, not depending you like it or you don't like, you just need to know the market, of course. You need to be able to make the basic market analysis, because the other people will not do it for you. So that's what we'll talk about. Last time we spoke about support and resistance level, and now at the moment we will discuss the trend, because of course the first important thing is just to understand the market volatility by using ATR, to understand approximately how much during the day a candle, right, can move, and to just get an idea it's a better day, right? A good day to start trading or not. However, second and the most important thing is just to follow the trend, because I don't want to use it, but it's a very popular word, right? People saying the trend is our friend. So now how we can identify the trend? It's very simple. First of all, we have the primary, and we have secondary trends. First of all, let's talk about it. What's primary and what's secondary trend? When we say secondary, so we can see, for instance, here kind of mini trend, or we can highlight here as well a trend, a downtrend, for example, for a while. Because right now I'm checking, you can see I'm using for simulation just 4 hours time period, so each candle here stands for 4 hours time frame. And then we have, of course, at the primary trend, which we can set like this. Let's say, for example, here we had a periods when we had secondary and the primary trend. Okay, so these two, right, trend, we can find secondary, and this one the main trend, the uptrend. So the questions about how we can simply identify these trends is it's very simple actually to do. We just simply finding the high and lower low, right, parts. For example, we can see the lower high points here. We'll highlight it, for instance, and starts, right, we have the line here at this point. We can see, guys. Okay, we just can change from just setting the color. I don't like this color. Honestly, okay, let's put a green color. The field color as a green. Let's make it like this. Okay, so we have, right, the lower highs. We will find them. One is here, another one here. So what happens then? We simply put in an extended trend line, or just trend line which is passing these right zones, and then we have an uptrend line. So it means that right, we had starting from 17th of March an uptrend which lasted, if you simply will add horizontal line, which lasted right approximately until 25th of March, so approximately about 8 days, let's say. So how we simply, first of all, right, how we understand the trend and how we visually, right, can get idea when the trend can reverse. So because understanding right how strong the trend is and where it will be stopped gives me an idea where I should put my stop loss, and of course at which level I should simply start trading in opposite direction. So how we do that? Because like I said, we have your lower highs and we have your higher highs. So what's higher highs is simply the points right getting eventually right higher each time. And if I will put simple circles right to the zone, I will see a interesting picture. What I would see that, for example, the first right higher high, even we can highlight this one as the first one. Let's say we had here as well a high level. Okay, we had the first one, we had the second, the third one, the fourth. Then we can see right, they're simply moving in a position that the higher highs, the next circle are getting higher. However, later we see the opposite thing. We can see right, the last higher high right, simply almost at the same level. We can find it, the previous one. So it's the first sign that trend is about to get right. I mean reversal right direction, so it's about to change. And later on what we can see, the higher point right gets lower. Here for example, I already get, after I can see right long red candle appeared, and I'm testing right the trend line. It's upper trend line, which in this option simply in this way plays the function of support. What I do simply, if I am trading up direction, it's the point for me to exit the trade. Or if right I'm not trading, I would simply thinking to enter or not, or simply what I can do is I can temporarily enter to an opposite direction, because what we can see at that point, we have a secondary right trend appearing, which right simply for a losing right for some time right to shorten this position. So as you can see, trading with a trend is very important. So that's why right, this even trading but visually with the trend lines can give you a good idea when to exit. I mean that simply if I follow the trend and I see the higher right getting lower, okay, compared of the previous right levels, so it's first sign that this support level right is about to be broken. Actually in our situation you can see right the price right movement broke the level, and for some time, for at least for another right 6-7 days, the price went down. So and of course right this period right, either I can exit the market, or if I'm trading right, my position will be shorting simply the trades. So that's why trading with a trend line is very important. So like I said, you can do it visually. We can the monitor right the same movement, for example, and the future movements as well. The thing is that when we talk about the market, about a trend having the three phases, it's a first phase, the impulse, as usually it happens right after a strong economic right event. After right some time, market right went to a flat position. For example, I mean, simply ranging between certain levels, and at these periods, right, we create patterns, or I mean, it's technical chart patterns, of course, right? It's not the topic of today's video. So if you want in the future to discuss, I mean, to know more about the patterns, I recommend you to subscribe to my videos and to follow me. So but here, for example, we have a kind of flag pattern, which simply, right, tells me that for some time, right, the uptrend will be stopped before again we see breakthrough again, right, start, I mean, trading upwards direction, I mean, after this point, because we can see we had uptrend actually, in, like I said, in general, and its fundamentals were easy because after coronavirus pandemic, we can see Australian dollar went down extremely low. However, right, after the situation gets stabilized, we can see it was trying to reverse back. I mean, simply taking back all the loss. Again, for example, you can see the first wave, the second wave, we make a pattern. The third movement, again, we can see the third impulse. And what we can see here, again, we can see the higher highs, right? What we had here, getting at this point again lower, for instance, compared, right, the previous one. And again, we make a pattern. We can see we entered to a pattern, and actually we can see the distance, right, of between the lows and the highs, right, getting narrow, which means here it's what we're about, right, to see a new breakthrough and then another wave, right, of trend starts. So this is how it works actually, because without I mean, being able to trade with a trend line, you'll not be able to set a stop loss, or you will not be able, right, to trade with the trend line. So now the question, how you can simply, right, make the things easy for you. Okay, well, like I said, easily, right, I mean, the opinion can be different, so can vary, because everybody, right, can see this movement in a different way. So for example, one of the most popular and standard way of identifying the average trend is EMA lines. So you can use, like a set standard, we'll go one. We have, I'm using, right, 55 as usually. We can add EMA again, 100, and here we can change a bit to just. What I will do is I will simply delete just one of the lines, and okay, let's, for some reason it doesn't want to be deleted. Okay, it's done. So all right, we'll add one more EMA. I will try to add it with a different color. Okay, EMA. Well, I can, for example, add orange, 100 time period. I can add EMA again one more time. Looks like I deleted, guys. Okay, 55. Can add, for example, blue color, and then we can add another EMA with 200. So 5500 and 200 can be the lines, right, which I'm applying for my trading. So what actually EMI lines can tell you, the moving average lines can simply tell you more about the trend line. For example, if I'm looking at AUD USD, even right when I had this upwards movement, still didn't have a constant right upwards movement. I had it after the lines broke. I mean simply 100 EMA and later on 200. So the breakdown of an EMA line can be the first signal about the start of new trend, and after the EMA line will be broken, it will be, for example, if it's broken upwards, playing the function of simply the support. What does it mean, for example, at this current situation, if I'm, for example, trading here in upward direction, let's assume, then I'm simply calculating distance to the support level. It stands about 123 pips. So in my situation, for example, so far, let's say around 0.62 178, approximate makes about 173 pips. It will be my stop loss level, for example, in case if the level will be broken, so it can be one of the first signals about the start of the new trend. For instance, even right now, so if you look at the current situation, so what's happening here, even if I'm selling here, because we can see it already, if you'll extend the time period, it will be much more clear for me, just to understand. If I set here 1 day time frame, what I'm able to see, I can see that right after a strong jump in daily graph here, looks like, for example, if I'm ending right here as a doji candle, it means I can see next few days a reversal movement. However, these reversal movement can be limited. I mean, I will not be able, to see a very, strong bearish trend like we had before, if I'm not breaking at least one EMA line. So this how simply, by managing the moving average line, to understanding the trend, I simply get some idea how I can simply minimize my risk, and of course how I can make sure that I have the right take profit and have the right stop loss levels. So another indicator which you can use actually to measure the strengths, it's average directional moving average, ADX, average direction movement index. We have ADX line blue, we have positive directional index, and then we have negative direction index, red line. It's a 14 time period standard, so we don't change it. So you can make the line as if you want, just a little bit more secure if you want. Total depends on the taste. So we apply it, then we will have average direction index. So how this direction index can give me some idea? It's very simple. For instance, if I can see that the green, the positive direction index is running above the red one, it means we have an existing bullish uptrend. And then I'm simply checking the ADX. So if the ADX line is above, as we can see here, 25, so it means that this trend is strong enough to trade. So below 25, we can simply enter to range position. So what we can see here, for example, for a trader who wants to enter a downtrend here, we can see a certain risk because the trend is still very strong. And meantime, we can see for the last couple hours, let's say, the average directional index this following the graph, it means there is a convergence, not divergence. So when the market was going up, average direction index was going up as well. So in that situation, what it can give to us, can give us still we can see for some pips market continue to rise. However, if we look globally, of course, if we look at primary trend, we can see the distance between the highest point and the lowest point, which means that still after some point here, after we had here the maximum buy volume and compared the volume of buys here with the minimum, average direction index went down, which the first signal that the volume, right, demand is about, right, to get lower, which means even the buyers right now find it too risky, to buy Australian dollar at this moment. The volume drop, and they prefer to book the profit. And of course, when you book the profits, when you get out from the position, you simply drop the trades, which means this time, right, supply can get over the demand. Of course, the price can go, right, at least even, right, if it was short time, for some time, right, to a downtrend, to a reversal movement. So that's what, like I said, as a conclusion, guys. So the best way of minimizing the risk in trading is just to understand the market, make right sure that what's happening currently in the world. So make sure that you familiar with fundamentals, because anyway, the price moves depending on demand and supply. And of course, in order, right, to buy, right, to see a strong movement, you need to see a strong buy volume, right, accumulated in certain asset. And it can happen only if there is a strong economic reason to do that. Next time we will talk about combining fundamental and technical analysis, and in my next sessions I will give you more details about confirmation levels, what kind of confirmation tools we are using to enter the market, the first or second. So that's why subscribe to my channel, and if you like the videos, hit like. So it simply will motivate me to make this kind of more videos for you guys and help you, right, to be successful in trading. Thanks for your time.